When you realize your combined income with your co-parent is too high for the DC guideline chart to give you a number, usually right after an online calculator breaks or a lawyer gives you the news, this explainer covers exactly how DC courts calculate child support above $240,000 and what you can expect in that situation.
If our combined income is over $240,000, how does a DC judge actually decide the number? That is usually the immediate and, frankly, anxiety-inducing question parents have when the standard formula stops working, because suddenly that predictable calculation just vanishes.
Section 1. The $240,000 threshold and the shift from formula to judicial discretion.
Crossing that $240,000 mark moves you out of a fixed formula and into a zone of broad judicial discretion, but courts do have to establish a firm starting line: $33,051. That is the absolute minimum mandatory floor a judge must order annually for one child at this income level.
$43,423. That is the mandatory baseline for two children before any upward adjustments are made. The court cannot legally order an amount lower than these baseline figures, but I can tell you from experience, high-income cases rarely just stop at the floor.
So, what is the Holland method, and how does it change what I owe or receive? This is the specific mathematical mechanism DC courts use to calculate obligations above those baseline floors we just talked about.
Section 2. The Holland method, extrapolating child support for high earners.
The Holland method is the procedural framework judges use to avoid pure guesswork. It's a mathematical approach where courts take a marginal percentage of all combined income earned past $240,000 and add it directly on top of the guideline floor. This ensures that every single dollar earned above the threshold is systematically assessed.
The marginal rates applied are exact. For one child, the court applies a marginal rate of 10.78%. For two children, the marginal rate is 13.29%. Those exact percentages are applied solely to the excess income beyond the $240,000 mark, and then that resulting figure is added to the mandatory baseline. The legal reasoning behind this approach comes from the 2024 D.C. Court of Appeals ruling in Bilta v. Guzman, which states that a child has the right to a level of support proportionate to the income and lifestyle of his or her parents. This means children are legally entitled to share in their parents' improved standard of living, so the court extrapolates support upward instead of just capping it at the floor.
If you want to see the exact five-step calculation DC courts use to apply the Holland method to a real income figure, the full breakdown is linked in the first comment below.
We have exactly 50-50 custody. Does that mean neither of us pays support? This is probably the most common and financially dangerous misconception parents have regarding shared physical custody.
Section 3. 50-50 custody, and why equal time does not mean zero payment.
The prevailing myth is that equal time equals equal money, but the reality is that the higher-earning parent almost always pays support, even with a perfect split of overnights. DC family law is designed to achieve equal living standards in both households. If one parent earns significantly more, support is ordered to prevent economic whiplash for the child moving between homes.
My income includes bonuses and stock options. How does that get counted? This introduces the complexities of executive and irregular compensation, which heavily impact the final number.
Section 4. Complex income breakdown, calculating gross income beyond the W-2.
In high-income cases, DC courts scrutinize the entirety of a parent's financial and compensation package. There are 6 primary types of countable complex income to be aware of: annual, performance, and signing bonuses, stock options and RSUs, deferred compensation, net business and self-employment income, rental and investment income, and finally, executive perquisites and military allowances. Omitting any of these during discovery can result in severe financial penalties down the line.
I want to emphasize a critical distinction regarding equity. Equity-based compensation counts as income the moment it vests. The second you gain unrestricted rights to those stock options or RSUs, the fair market value upon vesting is treated exactly like cash income by the court.
How does D.C. compare to Maryland and Virginia if one parent might move? This is a vital consideration for parents in the DMV who are either considering relocation or facing cross-jurisdictional issues.
Section 5. Regional context, D.C. versus Maryland versus Virginia.
Crossing state lines within the metropolitan area carries dramatic financial implications. D.C. caps its standard formula at $240,000 a year, compared to Maryland at $180,000 and Virginia at $42,500 a month. But the most striking difference is the age limit. Maryland and Virginia generally end support at age 18, or 19 if still in high school, while Washington, D.C. extends support until a child turns 21. Those 3 extra years add real, substantial money over the life of an order.
Could waiting to file cost me money I don't expect? This is the final critical question regarding the timing of legal action and your financial exposure.
Section 6. The cost of waiting, retroactive application, and compound errors.
The one thing to remember, above $240,000 in combined income, the number is not fixed by a chart. It is built case by case, and how complex income like bonuses or partnership distributions gets counted can shift that number by tens of thousands of dollars a year. Because D.C. courts can apply support retroactively to the filing date, waiting to address this can mean owing a large lump sum the moment a case is filed. So getting the calculation right early matters more than it seems at first. The full article, including the D.C., Maryland, and Virginia comparison, is in the first comment. If you want more guidance like this on D.C. family law, subscribe so you don't have to go looking for it next time.